Okay, let's say we are told to prepare an income statement. The information set below was taken out from the books of the distributors. Their financial year ends on 28 February 2019. The percentage markup used by rep distributors is 75%. Okay. We are given the sales of 875,000, the cost of sales, and the tax allowances. So you know there's the tax allowances, they decreases your sales. So this is what we're saying, minus 18,000. And then let's just go straight to the adjustments. Adjustment number one, commission income. So let's check the commission income. The commission income is 8,400. 8,400. So what are they saying about it? Commission income of 4,000 has not yet been received. So let's go and edit the commission of 4,000 rand. So if they are saying has not yet been received, that is an accrued income. So you have to add it. And then number B, the telephone account for February 2019 was not recorded. So let's go and record it. The telephone account is 12,560. This one was a mistake. Telephone account. We have a telephone. It's 12,560. And then the telephone of 4,150 was not recorded. So we have recorded it. If the thing was not recorded, they mean that this is an accrued expense. So we have to edit. The business made a donation of stock which is a price of 1,400 to a local crash before stock count. So since the here we have a donation. So a donation is an expense. Donation. So it's 1,400. The same price of 1,400. But then since we are selling, we're going to record the donation at a cost price because we're not selling, so we cannot record it as a selling price. We have to record it as a cost because we're not selling here. So we're going to see, but then see first. So the cost price plus markup is equal to selling price. So the markup is 75. So the cost price will always be 100. So cost price plus markup is equal to 175. So to get a cost of this donation, we're going to say 1,400 times 100 over 175. The answer is 800. The answer is 800. So remember I said to a local crash before stock count. So let's go and check our trading stock. Before stock count, it is 16,500. And now we are told that there was a stock that was donated before stock count. So if they are donating a stock, it means that your trading stock is decreasing. So 16,500 is equal to 15,700. Yeah. And then let's continue. Number 10. A physical stock count on 28 February 2019 revealed the following on hand. Trading stock is 15,500 on hand. So the stock that we have here before stock count is 15,700. So this shows that we have a trading stock deficit. We have a trading stock deficit. So it's going to be 16,500 minus 800 minus 15,500 is equal to 200 rand. Okay, and then number 2, we have a stationery of 460. How much is the stationery? The stationery is 10,800. We have a stationery 10,800. Then what are they saying in the adjustment? They are saying we have stationery on hand. So if they are saying we have stationery on hand, it means that we have stationery that is unused. So what you have to do is you have to minus a stationery on hand from a stationery that is an expense. You have to minus a stationery on hand from a stationery, the one that is in your nominal account section. So I'm going to say 10,800 minus 460. And then the next one, a debtor who owed 1,000. Okay, that is talking about the bad debts here. So how much is the bad debts? 2,300. The bad debts that the bad debts they are 2,300. Yes, the bad debts 2,300. Yeah, 2,300. Okay, and then they are saying a debtor who owed 1,200 was declared insolvent. A dividend of 40 cents to the rent was received and recorded. Write off the remaining balance as irrecoverable. So only 40 cents to the rent was paid. So we have to write off a 60 cent in the rent. So we're going to say 1,200 times 0.6 cents is equal to 720, which is your bad debts, your new bad debts. So we have to go and add them. And then an amount of 2,000 received from Pippen, a debtor whose debt was written off as irrecoverable the previous year was credited to debtors control and to the account of Ben. So it seems as if here we have a bad debts recovered of 2,000. This is a bad debt recovered. We previously wrote this data as irrecoverable. Now he has come back to pay us an amount of 2,000. So that is an income. It's a bad debt recovered. The February bank statement was received after the pre-adjustment trial balance was drawn up. The following must be adjusted. Dishonored check to 12,000 Rand. This was in settlement of account of 2040. So the dishonored check is 2,000 Rand and his account was 2040. This means that we gave this data a discount. So let's do this. We will discount allowed of 800. Discount allowed discount allowed of 800 minus 40. Okay, let's go back. So here we gave a data and discount thinking that this data was paying us. Only to find out that the check that he gave us does not have money because now the bank has returned this check as dishonored. So now we have to cancel this discount. So we have to go and subtract it. And then interest on, so we're going to deal with the interest at the end. And then we have the bank charges. Bank charges 1,510. We have the bank charges 1,210. And then from the bank statement, they are 180. And then the next one, insurance amount include an annual premium of 2,160. So if they are saying annual premium, this means that this insurance is from July, August, September, October, November, December 2018, January 2019, February, March, May, June. But the year ends at 28 February. So the year ends at the month of 8 from July, August, September, October, November, December, January, February. So this means that we have the 4 months that does not belong in this year. Okay, let's do this. Insurance. How much is the insurance? 1,800. Okay, let's go back to adjustments. So it's 2,160. So we need to know the months that does not belong in this year. So to do that, we're going to say 2,160 because the month of March, April, May, June 2019 data did not belong in this year. So I'm going to say times 4 divided by 12 is 720. So minus 720. Rent increased by 400 per month from November 2018. So the rent was increased by 400 per month from November 2018. So it's November, December, January, February, 4 months. And then the rent for March 2019 was received. This means that we have 18 months. We have the rent that is for 18 months. So let's go and check how much is the rent. Check our rent. The rent is 37,100 in a trial balance. So we have a 400 rand times. So the rent was increased on November, December, January, February for 4 months plus a March. So we're going to say 400 times 5. The answer is 2,000. So we need to subtract that 2,000 from 37,000. So that we're going to know that how much is a month before there was an increment. So we're going to say divide by 18 because this rent includes the rent for March. The answer is 2,700 before the increment. So when we add the increment, it's going to be 3,100. So we need to go and subtract this 3,100 because it is a rent, it is a receipt in advance. Okay. And then here they are talking about the interest. Okay. Let's go to the technology. Interest on favorable balance. Favorable balance. This means that this is an interest income. Let's check if we have interest here. So we don't have an interest here. So we only have this interest for the interest income is 408. Interest income is 480. So now here we have an interest expense. They say number 3, interest on loan from DEF bank has not yet been entered. Interest is capitalized received from DEF bank reflected the following. Opening balance is 270. And when opening balance is 270. So I will closing balance. How much is the closing balance? 235. And then the repayments during the year is 85,000. Repayments is 85,000. So to get the interest, we're going to say 270 minus 85,000 minus 235,000. So 270 minus 85,000 minus 235, it's 50,000. This is your interest expense. Then number K, depreciation on equipment is calculated at 10% per annum on the cost price method. How much is your equipment first? The equipment is 140. So let me just do this first. Let me just do this first. So the equipment is 140,000. 10% per annum. Okay. And then they are saying new equipment was bought on September 2018 at a cost price of 24,000. So we are going to say 140 minus 24,000 to check that how much equipment did we have at the beginning of the year. So it's how much? It's 115. So this is an equipment that we started a year with. So let's calculate its depreciation. 116 times 10%. The answer is 11,600. And then we have to calculate depreciation for the new equipment that was bought on September. So from September, October, November, December, January, February. So this equipment stayed for 6 months. So the equipment of 24,000 stayed for 6 months. So we're going to say times 10% times 612. So 24,000 times 10% times 612. The answer is 1,000. The answer is 1,200. Then we are done with the adjustments. So let's just go and do the calculations and then we are done. So 875,000 minus 18,000. The answer is 862,000. And then we have 400 for the cost of sales, which is 462,000. And then we have the rent. Rent is 37,100 minus 2,100. The answer is 34,000. Okay, let's go and check the trial balance. if there's something that is still need to be recorded. So if a discount receipt of 880, discount receipt. So we say 34,000 plus 600 plus 680 plus 2,000 plus 5,100. The answer is 49,280 plus 462,000. The answer is 511 to 80. Now the sum expense. Okay. Stationery is 10,800 minus 460. The answer is 10,340. And then we have the bad debts, 2,200 plus 720 is 2,020. And then we have 800 minus 40. The answer is 760. And then we have the bank charges, 1,210 plus 183. The answer is 1,293. And then 900 minus 720, 9,080. And then we have the depreciation, 1,200, 1,800. So let's check if we have wages and salaries. What's the usage? Table, bank charges, discount rate. Yeah, seems as if 1, 2, 3. Yes, seems as if we're done with the expenses. So let's calculate that. 20,295, 250, 700, 3,570, 800, 200, 3,250, 2,020, 760, 3,080, 1,800 plus 1,560 plus 1,050. So the answer is 183 to So we say gross operating income minus operating expenses. Then we get operating profit is 328 and 57 plus 480. The answer is 328, 537 minus 50,000 is 278, 537. Then